Hey guys, Nicole here with Momentum Accounting. In this video, I am going to be walking you through a simple way on how to explain the statement of cash flows to a client. So I see a lot of accountants shy away from the statement of cash flows when they're going through reports with clients, right? Normally we're comfortable with the balance sheet and the income statement, but the cash flow, particularly the one that comes out of QuickBooks Online, is very confusing and quite frankly not very useful. So hopefully this trick helps you with this. So this is the statement of cash flows right out of, well, I'm using a tool called Reach Reporting, but this is the same format that you would see. It's basically pulling data from QuickBooks Online for one of my clients here. And so the way it shows here, we can see that there's three categories. So there's operating activities, there's investing activities, and there's financing activities. Okay. So operating activities are basically, I like to think of the operating activity section as your cash basis profit and loss statement. Okay. And then your investing activities are usually they're your fixed asset purchases, right? Things that are not showing up on the profit and loss statement, that are only showing up on your balance sheet. And then we've got financing activities. So again, these are things that are only showing up on your balance sheet. They're not showing up on your profit and loss statement. And so you might have fixed asset purchases here. You're going to have loans, whether you're taking out a loan or making loan repayments. And then you're also going to have like owner's capital transactions. So again, top part here are things that happen on the P&L. Bottom part here are things that the bottom two sections, investing and financing, are things that happen on the balance sheet. Investing activities is like, okay, if you're, the reason it's called investing. So if you're buying a piece of equipment, you are investing in the future of your business by buying something now that will help generate future revenue. And then for financing activities, these are things that you are using to either infuse capital into your business or repay that capital, or take money out in the form of distributions. Okay. So the way this is presented right now is very confusing. First of all, one thing I didn't mention is we want to always show the trailing 12 months for clients. And the reason is because business owners think in terms of years. So just like if you when you were a W-2 employee, or if you're a W-2 employee now, right, you're always thinking about what's my salary this year and how much has it improved or how much has it grown. And so business owners, we're the same way. We like to think in years, and we also like to see trends. So by looking at it in month over month, it helps with trends. So what I'm going to do is I'm actually going to come in here, and what I'm going to do is I'm going to hide the entire operating activities line item. And I'm going to keep investing activities and financing activities, the detail for those. Okay. So what we're going to do to explain this to a client is say, hey, for all of your operating activities for the last 12 months, for the full year, basically your cash basis profit and loss statement, you're from operations, you lost $38,000. And then you went out and purchased vehicles and spent $186,000 on that. And then you had to pay back a bunch of loans. So in this case, we can go month over month and get an idea of, hey, it looks like it's costing with all these are probably truck leases, right? Or loans they have on all these trucks. Let's just look at 1 month where they didn't draw anything. So it looks like October 2023, just their loan repayments were $25,000. So let's say they didn't buy any new equipment. They only had their loan repayments, and then they had their cash from operations. Well, they didn't even make a cash flow in October 2023, and then they're spending money on debt repayments. And so this is where we can get in a situation. Let's say this was a positive number. Let's say they made $100,000. And so when they look at their profit and loss, maybe it shows they made a small margin profit. But then what they do, they bought equipment, they paid back loans, and now they're in a situation where they were where the business isn't generating enough profit to even pay for the things that are happening on the balance sheet. Now, in this case, I believe that they took out a loan somewhere, because if we look here, their total financing activities was a positive 131,000, which tells me they took out a loan at some point. So we got a $69,000 there. So let's see what their cash balance was. Yeah, so it looks like they got down to about 540,000 in cash in this month, and then they went and got a PayPal loan, right? So here's a situation where if we were working with this client, we could have told them back in early or mid 2023, when this was happening, that their problem is not in cash flow. It's really a profitability problem. We need to go fix your profitability problem so that you even have enough cash. You're even generating enough cash to pay for new equipment, to pay down your loan. You have to pay down $25,000 a month in just debt service. So you have to be generating at least that from your profitability. Then we can go back and look at the P&L and figure out what's happening on the P&L. So hopefully that was a helpful exercise for you to think about how to explain the statement of cash flows to a client.